What if I told you that everything you think you know about how money moves around the world is a carefully constructed lie? That the banks, governments, and institutions you see on the surface are just the polished facade hiding something far older, far stranger, and far more powerful. Before we dig into this rabbit hole, do me a favor and hit that subscribe button. Because what I'm about to show you isn't in any economics textbook, and once you see it, you'll never look at global finance the same way again. Here's the thing nobody wants to admit. When you crack open a modern economics textbook or listen to financial experts on television, they paint this neat little picture. They tell you that governments created our financial system through smart legislation, that central banks regulate everything, that economists with their fancy charts and mathematical equations designed how money flows across the planet. It's a comforting story. It makes everything seem planned, controlled, and rational. But it's complete fiction. The real story of global finance is so much older and so much weirder than anything they teach in business school. And here's what makes it even more fascinating. The system we use today, right now, in our modern world, is still running on the same hidden machinery that was built centuries ago by people operating completely outside the law. Let me take you back to a time that would feel almost alien to us today. Imagine a world where there are no central banks watching over the economy, no stock exchanges where you can buy and sell with a click, no insurance protecting your deposits if a bank fails, no unified currency that everyone agrees on. Instead, picture a world where the coins in your pocket might be worth less tomorrow because some desperate king literally shaved metal off the edges to make more coins. Where sending money to another city was like playing Russian roulette with pirates, thieves, corrupt officials, disease, storms, and warlords. This wasn't just risky. This was complete financial chaos. And in this chaos, something interesting happened. When governments couldn't provide safety, when laws didn't protect merchants, when you couldn't trust anyone beyond your own city walls, people found another way. They didn't rely on institutions. They relied on something more primal, more powerful, and far more effective than any law could ever be. They relied on identity, on blood, on shared secrets, on networks of trust so tight that breaking them meant losing everything. If you belonged to the right group, if you knew the right passwords, if you shared the right religion or family name or secret handshake, your wealth could travel safely across thousands of miles through territories that were actively at war with each other. But if you were an outsider, you were finished before you started. This is why the first truly global financial systems weren't built by countries at all. They were built by communities that existed outside national borders, communities that governments couldn't fully control and often didn't even understand. Let me introduce you to one of the most remarkable of these networks. Starting in the early medieval period, Jewish merchants created something extraordinary. They became the only people who could reliably trade between the Christian kingdoms of Europe and the Muslim empires of the Middle East. Think about how incredible that is. Two civilizations that were literally fighting crusades against each other, and yet commerce continued flowing between them. How? Because Jewish merchant families spoke multiple languages. They were mobile. They had cousins and business partners scattered across dozens of cities who all spoke Hebrew and shared the same religious laws. When a Christian merchant in Paris couldn't send a letter to a Muslim trader in Cairo, a Jewish merchant could send it to his cousin in Barcelona, who would send it to his brother-in-law in Tunis, who would deliver it to Cairo. And here's the critical part. None of them would betray the chain, because loyalty to the network was more valuable than any single transaction. These families created the first reliable international credit system because their bonds were stronger than any government's laws. You didn't need a contract written in Latin and stamped by a king. You needed a reputation within the network. Break your word once and you were cut off forever. That threat was more powerful than any legal punishment. But the Jewish diaspora wasn't the only game in town. Over in the Mediterranean, the Italian city-states were building their own financial empires that would change the world forever. The Venetians and Genoese weren't just traders. They were information machines. Their merchant houses invented maritime insurance, which meant for the first time you could protect yourself against a shipwreck without losing everything. They created early versions of joint ventures, where multiple investors would share both the risks and profits of a trading expedition. They built intelligence networks based on shipping logs, diplomatic reports, and a constant stream of letters from agents in every major port. Here's what made them special. They had information weeks before anyone else. While other merchants were still wondering if a ship had arrived safely, the Venetians already knew, had adjusted their prices, and were making their next move. Venice wasn't just a city, it was an operating system running on merchant trust and information speed. Meanwhile, Genoa was funding the entire Spanish Empire through a web of bankers who traded risk the way modern hedge funds trade derivatives. They were running sophisticated financial operations that wouldn't be seen again until the 20th century. Now, up in Northern Europe, a different kind of network was forming, one that looked less like a family business and more like a medieval corporation. It was called the Hanseatic League, and it was terrifying in its efficiency. Imagine a federation of merchant cities, places like Lübeck, Hamburg, Riga, and Gdansk, that decided to act as a single commercial empire. They didn't have a king, they didn't have an army in the traditional sense, but they had their own fleets that enforced trade monopolies. They standardized weights, measures, contracts, and credit terms across dozens of cities. If you broke the rules, they could ban you from every major port in Northern Europe, which meant economic death. The Hanseatic League proved something crucial, that coordinated networks could be more powerful than kingdoms. They operated like a multinational corporation 400 years before corporations were even legally recognized as entities. While this was happening in Europe, another diaspora was quietly mastering the art of moving money across impossible distances. The Armenian merchants of New Julfa don't get talked about much in history books, but they were absolutely brilliant. In the 1600s, these merchants built trade routes that stretched from Amsterdam in Europe all the way to Bengal in India, from Isfahan in Persia to Manila in the Philippines. They could move silk, silver, spices, and credit across borders controlled by hostile empires that hated each other. And they did it using nothing but family connections, letters written in Armenian, and their own internal courts for resolving disputes. European traders often trusted Armenian networks more than they trusted their own governments because the Armenians always delivered. Starting to see the pattern here? Everywhere you look in history, the same formula appears. When governments fail to provide trust and security, private networks step in and do it better. But now let me tell you about perhaps the most dramatic and mysterious financial network in history. This one emerged from the most unlikely source imaginable, a group of warrior monks who took vows of poverty. The Knights Templar were founded in 1119 to protect Christian pilgrims traveling to Jerusalem. They were warriors, sure, but they discovered something far more powerful than swords. They discovered banking. Here's how it worked. The Templars built fortified compounds across Europe and the Middle East. If you were a pilgrim about to make a dangerous journey, you could deposit your gold at a Templar compound in Paris. They would give you an encoded letter. When you arrived in Jerusalem, you could present that letter to the Templars there and withdraw your funds, minus a small fee. Does that sound familiar? It should. The Templars basically invented the international wire transfer 700 years before the internet. As their wealth grew, so did their secrecy. They developed their own codes, their own rituals, their own financial language. They became so powerful that they were lending money to kings and essentially operating as a central bank before that concept existed. And that's what destroyed them. In 1307, the King of France, Philip IV, was drowning in debt he owed to the Templars. So he did what powerful people do when they owe money to someone weaker than them. He changed the rules. He arrested thousands of Templars across France, tortured them into confessing to heresy, burned many at the stake, and seized all their assets. He tried to erase them from history. But here's the thing about networks. They're very hard to kill completely.
The Templar system of deposits, letters of credit, and international transfers didn't die. It got absorbed into other networks, other families, other institutions. The technology of trust they had built was too useful to disappear. By the late Middle Ages, financial power in Europe had shifted from religious orders to family dynasties.
The great Italian banking families, the Bardi, the Peruzzi, and most famously the Medici, became the backbone of European finance. Later, the Fugger family in Germany would become even more powerful. These families built branch offices in every major capital. They used coded messages to move money faster than royal messengers could carry it. They invented double-entry bookkeeping, which is still the foundation of modern accounting. They financed kings, popes, and entire empires. The Fuggers alone provided the money that got Charles V elected as Holy Roman Emperor. Let that sink in. A private banking family decided who would rule the largest empire in Europe simply by controlling the credit. These families didn't need armies. Their power came from two things: information that moved faster than anyone else's, and credit leverage that made them indispensable. Sound familiar? It should. It's exactly how financial power works today. But financial power isn't just about moving money. It's about controlling knowledge. And one network controlled more global knowledge than any government in the world: the Jesuit order. Founded in 1540, the Jesuits built schools, missions, and scientific outposts across Asia, Europe, and the Americas. They mapped coastlines. They documented trade routes. They studied local economies and currencies. They learned languages. They advised kings and merchants. The Jesuits weren't bankers in the traditional sense, but they controlled something more valuable than gold. They controlled information flows. In the early modern world, information was currency. Knowing which ports were safe, which rulers were stable, which crops had failed, which silver mines were producing, this knowledge could make or break a trading venture. The Jesuits were the world's most sophisticated information brokers, and everyone who mattered depended on them. As Europe entered the Enlightenment, yet another network emerged. This one wrapped in symbols, rituals, and sworn secrecy: the Freemasons. Now, I'm not going to tell you the Freemasons controlled everything or that they were running some grand conspiracy. But here's what they definitely did. They created spaces where merchants, bankers, scientists, politicians, and industrialists could meet and build trust outside of official government channels. At a time when communication was slow and governments were corrupt and unpredictable, a Masonic handshake could guarantee trust more effectively than any legal contract. Many of the early industrialists, central bankers, and financial innovators were Freemasons because the lodges offered something governments couldn't: a stable, rule-bound environment where elites could cooperate across borders. All of this, the Jewish and Armenian diaspora, the Italian and German banking families, the Templars, the Jesuits, the Masons, the Hanseatic League, all of it was the foundation being built for the modern financial world. But the final, decisive transformation, the moment when private networks reached their absolute peak of power, came with one family whose name still carries an almost mythical weight today: the Rothschilds. Now, the Rothschilds didn't invent international finance. What they did was perfect it, to a degree that had never been seen before and has rarely been matched since. Here's what made them different. While earlier networks relied on slow-moving caravans, ships that took weeks to cross the Mediterranean, and letters that might take months to reach their destination, the Rothschild family built the fastest private communication system in Europe. And I mean faster than royal couriers, faster than military dispatch riders, faster in many cases than government intelligence agencies. How? They used carrier pigeons, bonded couriers, and a network of agents who did nothing but collect and transmit information. When news broke anywhere in Europe, a battle won or lost, a king dying, a revolution starting, a harvest failing, the Rothschilds heard about it first. And in finance, information isn't just power, it's profit. The family patriarch, Mayer Amschel Rothschild, did something brilliant. He stationed each of his 5 sons in a different European capital: London, Paris, Frankfurt, Vienna, and Naples. These weren't just branch offices. They were nodes in a synchronized multi-city banking machine connected by coded letters, absolute trust, and ruthless efficiency. They were the culmination of everything earlier networks had learned. Diversify risk across geographies, move information faster than rivals, keep your intelligence private, and reinforce trust through blood loyalty. They financed governments that didn't trust each other. They transferred money across borders between countries that were at war. They stabilized currencies, funded railways, and built the infrastructure of the modern industrial economy. The most famous example of their information advantage is probably the Battle of Waterloo. While the outcome of the battle was still unknown to the British government, the Rothschilds already knew Napoleon had lost. They used that information gap to make strategic moves in the bond market before anyone else knew what had happened. They weren't magicians.
They weren't puppet masters controlling history. They were simply playing the information and network game better than anyone else alive. The Rothschilds weren't the beginning of secret finance. They were the last great expression of a world where private networks ruled everything. Because as the 19th century progressed, something started to change. The state finally began to catch up. Public institutions, central banks, national stock exchanges, clearinghouses, government bond markets started to emerge as governments tried to tame the power of private networks. But here's the twist. Even as these official institutions grew, the networks didn't disappear. They did something much smarter. They merged with the new architecture. They went from being outside the system to being inside it, wearing institutional clothing. Which brings us to right now, to today, to the world you and I are living in. On the surface, our modern financial system looks orderly and regulated. We have central banks controlling monetary policy. We have securities regulators watching the markets. We have international institutions coordinating between countries. We have transparency requirements and disclosure laws and capital regulations. It all looks very official and above board. But when you dig deeper, when you really look at how money actually moves in the modern world, you start to see something eerie. The old machinery is still there, running underneath everything. Modern shadow banking, which involves trillions of dollars moving outside official regulation, looks remarkably similar to the off-books financial activity of the medieval Venetian and Genoese merchant houses. Eurodollar markets, where US dollars circulate outside US government jurisdiction, behave almost exactly like the cross-border credit networks of the Sephardic Jewish diaspora. Offshore banking centers in places like the Cayman Islands, Switzerland, and Singapore rely on trust, secrecy, and private relationships in ways the Knights Templar would immediately recognize. Private equity networks and venture capital circles function like modern versions of Masonic lodges, exclusive clubs where deals happen quietly and access matters far more than any legal framework. Global intelligence networks and multinational institutions like the World Economic Forum behave remarkably like modern Jesuit orders, collecting information across continents and shaping policy behind closed doors. And the most powerful financial players today, central banks, sovereign wealth funds, multinational corporations, they rarely act alone. They operate through conferences, coordination groups, private messaging channels, and informal alliances that look eerily similar to the merchant guilds and family networks of medieval Europe. The technology has changed, the speed has increased, but the fundamental structure, it's the same. Behind every major financial crisis of the modern era, you can trace the outlines of these old networks. In the 2008 financial collapse, the official institutions failed spectacularly. But who survived and who died was determined by private relationships between banks, regulators, and major investors. In the Eurozone crisis, it wasn't laws or treaties that ultimately determined who got bailed out and who didn't. It was networks of political and financial influence operating behind the scenes. In the rise of offshore finance and tax havens, private networks of lawyers, accountants, bankers, and corporate executives designed systems to move money across borders faster than governments could possibly write new rules to stop them. Now, it's really tempting to hear all this and think it's some kind of conspiracy theory, that there's a secret group of people in a dark room somewhere controlling everything. But that completely misses the point. These networks aren't sinister, they're structural. They exist because financial systems absolutely can't function without trust, information, and coordination. And governments, even today, even with all their technology and resources, still struggle to provide those things at the scale and speed that markets require. When markets panic, when currencies collapse, when countries default on their debts, it's not the official laws and regulations that restore order. It's the networks. It's the emergency credit lines arranged through private phone calls. It's the behind-the-scenes negotiations between people who trust each other more than they trust the system. It's the informal agreements that happen in places where cameras and reporters aren't allowed. That's the lesson history keeps teaching us, over and over, in every century, in every crisis. Every major public financial institution sits on top of a private network, and that network is where the real power actually lives. The Knights Templar didn't just invent letters of credit. They proved that secretive organizations could become more financially powerful than kingdoms. The Jewish and Armenian diasporas didn't just connect continents. They showed that identity-based trust networks could outlast empires. The Italian banking families didn't just invent modern banking techniques. They demonstrated that information speed equals financial power. The Jesuits didn't just collect knowledge. They proved that controlling information flows is as valuable as controlling gold.
The Freemasons didn't just hold secret meetings. They created a parallel system of elite trust and coordination. The Hanseatic League didn't just regulate ports. They showed that networked cities could function as a corporation more powerful than nations. The Rothschilds didn't just fund empires. They perfected the art of the private financial network to a degree that changed what was possible. All of them, every single one of these networks, built the nervous system that our modern global economy still runs on today. A web of trust, leverage, communication, and influence that moves faster than laws, faster than governments, and often faster than the markets themselves. So here's the question I want to leave you with, the question that keeps me up at night the more I study this stuff. What are we actually living in today? Are we living in a system of transparent institutions with democratic oversight and regulatory control? Or are we living in a system of private networks that have simply learned to wear institutional clothing? Because here's the deeper truth that nobody wants to say out loud. The more complex our world becomes, the more valuable trust becomes. And trust still flows through private networks long before it ever reaches public systems. That's why, in every financial crisis, the people with access to the right networks survive and often profit, while the people outside those networks pay the price. It's not fair, it's not transparent, it's not what we're told in economics class, but it is reality. Global finance was born in the shadows, built by networks operating outside the law, refined over centuries through crisis after crisis. And even now, even in our modern world with all its technology and regulation and supposed transparency, those shadows still shape everything. The networks are still here. They've just gotten better at hiding. If this changed the way you think about how money and power really work, hit that subscribe button and turn on notifications, because we're just getting started digging up the secrets buried in financial history. I'm the monetary archaeologist, and I'll see you in the next one.